What's going on, everyone? Back with another video. I know it's been a break, guys. I did a little revamp on this channel. I wanted this channel to be more personable, not more of my academy. If you want my academy, you can click the link in the description where you can join True Trader Academy, join my trading floor with other traders that I've educated. But on this YouTube channel, I'm pretty much going to focus in breaking down the global macro landscape and the technical setups that I'm using to profit and what I was most would say to monetize off the market moves. Now, in this video, in these outlooks, I'm only going to focus on DXY, S&P 500, Bitcoin, and the major currency pairs. If you want to take a deeper look into other markets, join my inner circle. You can find that link in the caption as well. Or if you just got questions that you want to ask me about macro, if you're still trying to understand it, help with your prop firm, all of those things, you can either join my VIP trading floor with my traders, or you can join my inner circle where you have access to me directly to give you that personalized guidance. Now, my goal in these outlooks is pretty simple: to help you understand why markets move the way they do, not just where they're going next, because we don't want to get caught up in trying to time markets to catch every move. The goal is just to position ourselves for an analysis that we're using to play out. Now, the analysis that I will be giving to you guys from a technical level, this is a strategy that I've been using over the last 10 years. I have a verified track record. Yeah, so, and I'm showing you what I'm doing. So if I can do it, then you can do it, especially if you follow what I'm doing. Now, if you do something else, I can't help you. So let's take a look at what's driving this week and how we can position ourselves for opportunities that's ahead. So starting now, I'm going to start with DXY because it's kind of like, I mean, it's the world reserve currency, is where you have to start to figure out where everything else is moving. Now, if you're new to my channel or you're new to my content, I will be focusing on the monthly time frame. Reason being, you get the best entries with the least amount of percentage drawdown when you trade on the monthly, right? You can see the move clear, you can see the market clear, and it's just easier. So don't expect an analysis to play out in a day, because we're looking at the monthly. But the value of the monthly is you don't have to use big lot sizes because you're catching big moves. Most people have to risk a lot because they're catching smaller moves when you zoom in to the 1 hour, 4 hour, 1 minute, 15 minutes. So stay off those time frames if you really want to make some good money with some good risk management. I always tell traders, when you trade with good risk management and you catch good moves, you don't have to worry about emotions. Emotions are only for people that are trading with a lot of risk and small moves, because it's a roller coaster. So starting with DXY, if we take a look at DXY, I don't know how long you guys have been following markets, but I've been in these markets for a very long time. Okay. And I've been watching DXY really back since 2020. When we had that COVID collapse, and then we rallied from COVID, then we pulled back again. So I've kind of been knowing the cycles where I'm at with DXY, and I've just been using it to my advantage. If you've been in my True Trader community, we bought DXY last year around this time, and we caught that rally up to 110, and then the dollar ended up selling back off, erasing all those gains, falling back to this below this monthly support level. Good key level of opportunity in this zone. So right now, I've been looking at buying opportunities. I've been buying it since it fell down to like 97. So in some small profit, nothing too crazy, but this is what's moving the market. Now, if we look at this from a macro perspective, what's been going on in America? The biggest thing is Trump tariffs, China retaliation to the intentions of 100% tariffs that are going to go into effect on November 1st. We'll see if that plays out. You know how Trump is. He likes to use his social media as a political stance. If it plays out, if it don't, I'm not building that into my analysis until it's 100% effective. But it definitely sent some sentiment in the markets that created some movements, but nothing too crazy in the dollar. Um, Now, we do have this government shutdown. The Republicans are just not wanting to open the government until they get the spending under control, which I kind of agree a bit. If you understand government shutdowns, people aren't getting paid now, but they're going to get paid once it reopens, and they're going to get like a back pay. So, I mean, that's what you sign up for when you join like a government, when you take on a government job. I mean, I was in the military and we had a government shutdown once before. They held our pay and then they just ended up paying us. So nothing too crazy. And then you get, when there's a government shutdown and you have to pay bills and stuff, like they don't have to make you pay if that's what your income is coming from. So it's not like it's something to just crazy panic about. Now, from a macro trader perspective, why this is big to us is because we haven't been getting any labor data that has been coming out in these markets. And next week, we get an interest rate decision from the central bank. Now, what data are they going to follow? Obviously, they're going to follow the data that came out in September to give them a decision in October because data lags. Now, if we look back at this data, we saw from September we saw inflation kind of stay stagnant, but we got some solid US data on September 25th. At the end of the month, we saw solid drop in unemployment claims. We saw a solid GDP, a big recovery from GDP from adjusting to those tariffs. And yeah, I mean, from the economic data that we've got, this doesn't scream interest rate cuts. If you've been looking at US Redbook data too, it's not on Forex Factory. Those neighborhoods have been holding strong. I think the last retail sales report was also even hot. Yeah, it came out extremely hot, and it also, they were revised up from previous. Unemployment claims also were down. I just don't see why the Feds will cut rates again, especially if we don't have that labor market data. Now, if they saw that labor market data, then that's different. ADP was negative. I mean, we kind of expected that. Jobs aren't being created, especially in the private sector. So, I mean, yeah. But if you look at the jobs that are available, they're still solid. Right? There's still jobs available. People aren't getting fired as much. The turnover is going, and people aren't really quitting. And if people do quit, it's easy for them to find a job. People just don't want the jobs that's available, or people just don't have the skills that's available for the jobs that's available. People don't have the skills available for the jobs that's available. So it's not a bad labor market. Consumer sentiment still kind of strong. Powell spoke and he pretty much said that the labor market is kind of weakening. That's why they kind of are trying to kind of create this narrative. I think it was October. Okay, right here. They're trying to speak on these things. They have to say, okay, if the labor market is weak, we're going to cut rates. Okay, cool. But inflation is still up. So it's like they also can't ignore that. So they're pretty much just trying to find a balance. But as far as trying to forecast next week's rate decision, we have to look at this CPI report that's going to come out this week. Now, they're expecting CPI to stay unchanged from previous. We'll see. We have been saying oil prices low. Oil prices do cause it. Low oil prices can cause inflation now. And we also saw Redbook's US Redbook sales are still up. So the consumer is still kind of spending strong, hey. So we'll just see. I don't want to really don't try and gamble this interest rate decision because it's really a 50-50. I mean, markets are expecting a cut. We haven't got any labor data. They probably say, okay, we just need to wait before we cut. But or they may cut and say we're done cutting. So we just, I mean, at this one, it's just kind of like a playing it by ear. It's not anything that you can really call. But looking at the previous data from September, pretty strong month. We had lower CPI, up PPI, and some strong economic data for the dollar. So that's why the dollar is kind of still holding its weight. But yeah, that's DXY. Other than that, for the week, we have interest rate decision from Australia. They may cut, they may hold. Inflation has been kind of sideways. Labor market is still weak. I mean, even if they don't cut or if they do cut, it's just not good for Australia. And that's pretty much it. Some CPI data coming out of Europe. Nothing too crazy on the economic calendar. Actually, y'all, I was in the wrong week. Look at me. Let me go to. I jumped back too far. All right, here we go. So nothing too. Like I was like, Aussie interest rate decision. I didn't see that earlier, but nothing too crazy coming out this week. We got some economic data coming out of the Eurozone on Friday, but during the week, really nothing crazy. Some strong retail sales data expected to come out of Canada. I can definitely see that playing out. CPI is expected to fall. They really look at the median, so we'll see how that plays out. And UK expecting inflation to pick up, which I could see that playing out too. That inflation picking up after they just cut rates is kind of the opposite of what they want to see happening. So we're going to talk about those bad boys from a technical level. Now let's go back over to trading view. So far with DXY, pretty much just, oops. If we go into the, oops, hold on, let me, if we zoom into the daily, because that's the lowest I'll go, guys. Looks like we're building up some momentum from yesterday. I mean, from Friday. And then if we break out above 100, then I think we back in that bull momentum is going to pick back up, or we can just consolidate back down to 96 because we are fighting some resistance now on the daily. So, but if we look at the 200-day moving average, we still below the 200-day. So it's kind of like an opportunity, but not like a crazy opportunity if you're trying to catch in. S&P. Now, if you are new to my channel, if you're new to my content, if you want to counter trade the trend, go ahead, use proper risk management. If not, sit on your hands and just wait for a price to fall. Now, if you're somebody like me also who holds stocks like in your long-term portfolio, right now is a good chance to start being like going into decision making mode. Are you going to hedge against your portfolio in case prices were to pull back, or are you going to take your profits? But this is the time for you to make that decision. Somebody like me, I'm hedging my portfolio. I'm not going to sell my stocks because I think I got in at really good prices. So I'm just going to hedge if they were to pull back. And if they pull back, there's just an opportunity, right, for people who missed the longs to start buying. Just don't want to buy it too high. So you just got to be patient to watch to get that bottom of the dip. I'm expecting us to break below that April low to go back lower because we caught that April dip, but I really wanted to come a bit lower, but we got that rally back up high. So just got to sit on my hands and wait for it to come back down low. But some shorts on S&P won't be bad. Just manage your risk. Bitcoin, zoom out to the 6 month. It's a volatile asset. We got this 6 month candle. Let's see how that play out. That 3 month candle is one that we really need to watch because look like we're going to close bearish on that month. So the next month can follow. Now, I do expect Bitcoin to push back low, probably as low as about 30K, maybe being the bottom, somewhere around there. Because each one of these cycles, I mean, that's just how they play. We had this cycle right here, had this cycle right here, and now that can be the next cycle. But you see how these widen? The next cycle is going to probably be at like 240, and then it'll wrap down to like 60. So you just got to watch these cycles in Bitcoin. Well, really in crypto, because they just move in cycles. It's like a heartbeat. You got to find the It's kind of like that. So Bitcoin hasn't really done anything surprisingly, especially if you know how to use your fibs and you measure that breakout to the upside. I mean, it just maxed it out. So we running into like some strong resistant levels to the upside, and now we just got to catch those pullbacks if we wanted to fall back low back down to what's it like 27, 30K around that area. So kind of like how you got to play it by ear. I mean, play it by the levels, but you can't buy that high, especially not on a CFD contract, and especially not with spot. Because if you buy this spot trading, that's like a 75% pullback that you're exposing yourself to. So don't go too crazy. But I expect a pullback. If you're going to short it, use your risk management. Don't be too greedy because you're catching a big move. Euro USD, we already breaking down. We hit that hedge level on the monthly. If you've been following me for a while, I've been watching this bad boy for a minute. I've actually been trading it for a minute. So, I mean, we at a nice, we below the sell zone, but I still think the risk to reward is nice if you want to come into selling it. But on the daily, I think, yeah, we had a nice resistance. So you just can't start selling it when it get back to like 1.115, because then that's when it may consolidate and push back up. So you better get in that sell now to catch that fall, because then if this support doesn't hold, then we can fall back to like 113. And then if that don't hold, then we can just continue to fall. So can't buy it. It's extremely too high. It is trading against the trend, but that's the only opportunity, one of the only opportunities that are out there right now. Then we have GU, same price action as EU. If you don't understand that those correlations, they kind of like move the same way. But the pound is usually stronger than the euro. So the euro USD price action usually be a lagging behind this. So pound also looking to short this bad boy. I just talked about those fundamentals today. If they get that high inflation after cutting rates, then the UK is cooked. But it's still a bit overpriced. So definitely expect a correction, at least back down to 123, and we can go as low as 1.05 to be honest. But this is a nice short. USDJPY still going strong. I mean, if you've been in my community for a while, we've been buying this since like 140. Since they intervened. Like I said, I don't know how long you guys have been watching markets. I've been in these markets for like the last 4 years. I'm still in some of these pairs. I bought this in 2023, December, September 2024, and then I bought it again in April. So this is where they intervened at 160. It was like 160, 161. They intervened. Then markets rallied again from that buy. They didn't intervene, but they hiked rates, and that was their intervention. They just didn't say that they intervened, but they hiked rates. Market sold off, bought it again, and now we're just trending back up. So I think they are going to intervene again, but I think we're going to break above that 160, maybe hit 166 or go as high as 164. I'm sorry, 174. But once we get to this level, if it closes above it, then we know we're going higher. Never expect a trending market to just like not trend. Like like I always tell people, a bull market can't be overbought. It can be overly extended, but that overbought, it can keep buying. That's just what happens when you trade with the trend. AUD USD. I mean, if you've been in my VIP trading floor, you will have known we've been selling this bad boy for a minute. I mean, we did get those push-ups, but overall it's been bearish. I mean, let's go into the daily to see what you can do right now. I mean, you can't sell it right now because it's sitting at an intraday support. So it can literally push back up to like 0.67 and then fall. Right now, you just missed it. You'll have to wait for this to break and for it to retest that support as resistance and then catch the next drop. But right now, AUD USD, it's not really much you can do. But sit on your hands. I'm already in some shorts from back over here, and even got some shorts early in September. Same thing with NZD price action. The only thing different is that New Zealand dollar is just a bit weaker. Let me delete that so you can see. So we've been selling this bad boy since over here. We even got some more shorts right at 65, 60, like right at 65. It's just trending down. I mean, following its trend. I think we can break out and go as low as like really 4,000, but we'll see. Maybe back down to like 50 and bounce back with this rally. That would be a nasty buy from here to here. Ooh, if we can get that again, like over here, and just rally all the way back, that would be nice. But the dollar will have to show some signs of some weakness. But it's possible. It's definitely possible. We saw USDCHF play out like that. USDCHF, speaking of this, another one, a hedge opportunity. This looks like a nice little reversal to the upside, y'all. We probably get this. I mean, we've been trading below this monthly support for a minute, like way below it. But it is a hedge, so watch. But like I said, we got that bounce in it before. We always get them bounces when we come low. So we usually want to get the sales in this market, but because that's the long-term trend, selling dollars for Swiss franc. But right now, these markets are showing some a little bit different. Now, if we look over here at this low and we just measure that whole range, we are still at like a really good support level to buy. Because it can just really just consolidate in this area. So it can come really as low back down to 770 and then rally again. But I would at least start wanting to buy it, at least to where like a 1 to 3 risk to reward setup. And that's anything really below there. So that's that. And then USD CAD. I mean, this was a call that I've been given. Easy play. I mean, Canadian dollar may, you can't try and catch this bull run now because it can pull back. It literally can pull all the way back to 1.37, especially with that data that comes out this week with that CPI data. Now, if that data comes out weak, then this bad boy is about to get sent. But we'll see. I don't think it's going to come out weak. But I'm not going to gamble it. Only thing I can do is if it falls, I'll buy it. If it falls back down to that low. But if not, I'm already in some longs. They'll just continue to play out if it continue to go out higher. But that's pretty much all we got this week on the major sides. Like I said, if you're new to my channel and whatever I just went through was a bit confusing to you, definitely join my TTFX mentorship. It's a 4-week program with me and you. And I teach you pretty much everything you need to know to go into markets to start being profitable. But if you already got that core knowledge, that basic foundation, I don't know what you know, so you can't ask me which one you need to choose from. I do offer a community of traders who I've educated who's profitable, taking profit and withdrawals. You can join that community, or you can join my inner circle where you can get personalized day-to-day feedback from me on your trading performance. So I have 3 different things that you can take advantage of, but every week I will be dropping a video on Sunday. I know this video came out on Monday, but every Sunday before 6 p.m. Eastern, well, at 6 p.m. Eastern, I will be dropping my weekly outlook for the week. So make sure you guys like, subscribe, and comment. Give me your feedback in these captions. Now, only ask me about the currency pairs and the markets that I analyze. If you want to know about any other currency pair, any other market, join my inner circle or join my VIP trading floor. But that's all I got for you guys today. See you on Sunday.